Well, this year we've got some exciting news happening at the Lipper Fund Awards. For the first time, we are splitting up the fund universes in active and passive products. In the past, the Lipper Fund Awards were only handed out to mutual funds, regardless if they were active or passive. This means you had a mixture of management approaches which not really fitted to each other. And with the rise of active ETFs, we decided to split up the market in active and passive as the product world is. So we are now matching the reality on the markets and giving out awards to those who deliver a consistent outperformance on the active or on the passive side. Well, the short answer is there are no changes to the methodology with regards to how we calculate the Lipper Fund Awards. So both the active and the passive are based on the Lipper Leader for Consistent Return methodology, but there are changes in the underlying universe. So in the old world, we had the Lipper Fund Awards only handed out to mutual funds, and the universe was built from active managed mutual funds and passive mutual funds. So now we are stripping out the passive from the active, put them into the passive awards, and adding active ETFs. For the first time, ETFs are included now to the active universe to reflect the reality on the markets. So what we see in the fund industry is that the investors as well as the product promoters become agnostic with regards to the wrapper they use to distribute their investment strategies. And therefore, we see a lot of launches of active ETFs to reach customers which do their portfolio management on their own, which are using neo-brokers or other platforms because you can't reach them with mutual funds. And also in very highly increasing usage of ETFs in the institutional space. And we want to reflect this change in the market by getting wrapper agnostic and just focusing on the management approach and try to filter out those funds at least once a year who are doing the best job in their given classifications. And this is also new, that we do it on classification level and not only on asset class level.